I'm Sebastian St. James. Stock markets around the world have crashed. The ASX has crashed. Do you know there have been some winners and there have been some losers? And I'm here to tell you all about them. This is what the ASX looks like in the last 30 days. Oh, dramatically down. A couple of things to notice. How down the entire month is overall. You can see that. And particularly in the last week or so, a gigantic crash. How big is that crash? How big is the market down overall? I'll let you know. I've placed a green arrow at the top of the market over the last 30 days and another at the bottom of the market over the last 30 days. If I hover over the peak, we see it is 7,286.6. Jot that down. And if I hover over the low, it is 6,418.9. How much has the market fallen over this last month? Can you do the math in your head? No, of course you can't. That's my job. 7,286.6 minus 6,418.9 is 867.7, which is 11.91% dip. That has been what you've lost in the ASX over the last 30 days. But what about that sharp drop there over the last week? And how bad has that been in historical comparison? Over the last 5 years, here are the 5 worst drops. The worst was in 20th of March in 2020. That was a 13.2% drop. The 13th of March 2020, 11.1. 28th of Feb was 10%. This week, which is the sharp one you saw, is 6.7%. And on the 9th of February, you go back to 4.7. So there you go. Fairly serious as drops have been. But what about the S&P 500? How have they performed? Here is the S&P 500 over the same 30 days. And it's done fairly poorly as well, with a couple of rather significant drops there on the right. So exactly how much has it dropped? I'll do the math. This is the math on IVV. If you want to own the S&P 500, which is an index, you can't own it directly. You typically buy it through an index fund, and the one you may buy it through in Australia is called IVV. So let's do the math on that. Its top was 584.86. The bottom was 522.47. This is just this month. That's a difference of 62.4, which is 10.67%, which is terrible. Dismal, but not quite as bad as the ASX. I don't care about the last month, Sebastian. I'm not a short-term thinker. Zoom out, show me a longer period of time, why don't you? Well, here's the last year. And there it is. You can see the green arrows, which represented this month. The top little green arrow, the bottom little green arrow, and that's what it's looked like over the last 12 months. Gently downward over the last 11 months, and then the last month, I'm sorry, it's all over. All bets are off. I shall now stack the ASX 200 and the S&P and see what they look like on top of each other. In the black we have the IVV, which is the S&P 500. In the green and red we have the ASX 200, and you can see that the S&P 500 has outperformed the ASX 200, but it's gone through a similarly large dip there. So thumbs up to the S&P 500 over this period. 1 year not enough for you? Let's zoom out a little bit more. Here is the last few years showing the ASX 200, and I've put in some simple moving averages there. There's a 200-day simple moving average and the 50-day. 250-day simple moving averages. What are they? They may be new to you. They are industry standards for representing long periods of time. That's a 200 moving average, and short periods of time, which is the 50-day moving average. I'll stick them on the chart and see how we go. Let's take the long-term simple moving average, which is the dark blue line. For most of the year, the stock price has actually been above the long-term moving average, except in December, where it kissed it for a moment, went back up, and it's been basically horrible, diving in and out through the simple moving average. And then last month or so, no, that is not good. I don't like that at all. Simple moving averages are great for getting rid of the day-to-day or even week-to-week perturbations and trying to get an overall flow of the direction of the market, and whether the stock price shoots through that or shoots past that downwards can tell you a lot about the overall momentum of the market. So exactly what should you do when the stock market crashes? I've got a video coming out on that shortly, so make sure you're subscribed so you don't miss out. Now, in any stock market crash, which we're just in the middle of, surely there must be some winners and there must be some losers. Yes, there are. I know the secrets to which companies are which, and I will share them with you right now. Here are the worst 10 performing large cap stocks on the ASX over the last year. At number 1, we have Magellan Financial Group Services, which has been the worst at minus 73.6, drop over the last 12 months. In New Zealand, Codan, Ansell, Chalice, Liberty, Domain, Domino Pizza. Too bad if you're after a snack. I'm sorry, the company is not doing well right now. Xero and Pendal. They are the 5 worst performing stocks over here. They're the 5 best performing stocks over the last 12 months. I shall share them with you. And here they are. At the top we have AVZ Minerals, Core Lithium, Grange, which has nothing to do with wineries in case you think it is, Yancoal, Lake Resources, Stanmore, Whitehaven Coal, wow, a lot of coal, New Hope, Coronado Global Resources and GrainCorp. So basically mining companies mostly overall. Hopefully you've owned the best and you've avoided the worst. Do you know there is a recession coming to Australia? I've done a video on that. Go ahead and watch it now.